Assalamu alaikum class. In this lecture, we will discuss about stock split and its impact on stockholder equity. So, what is stock split? A stock split is a corporate action in which a company divides its existing shares into multiple shares, say 2 for 1 or 3 for 2, and so on. Although the number of shares increases, the total value of a company remains same, or you can say the ownership percentage of shareholders remains same. That's why the market capitalization is unaffected. What may be the reason behind stock split? The company perform stock split in order to make the stock or the shares more affordable for investors by lowering or decreasing the price per share. So here you can see after stock split, the impact of stock split on the various element of stockholder equity. So here you can see the number of shares will be increased, whereas the par value per share will be decreased, and there will not be any impact on total par value. The total par value will not be changed. So let's begin exercises from the book Financial and Managerial Accounting by William Zaka Bettner. We are discussing chapter 11, and here we have a brief exercise 11.8 in front of you. So let's begin. The company declared 2 for 1 stock split. 2 for 1 means if you have one share, it will be split into two shares, or it will be converted into two shares on its common stock in order to intentionally reduce the market value of its stock so that it would be an attractive investment for a larger set of investors. So this is the most prominent reason, or this is a very common reason for stock split, to reduce the market value in order to attract uh, investment for a larger investors. So the common stock is described as follows. So other data is there are 100,000 shares outstanding. Par value is 10,000 per share originally sold. That is, this is originally selling price, whereas current market price is this. Current means at the time of stock split, the market price is this. So describe the likely impact, if any, agar if it is that the 2 for 1 stock split will have on number of shares, number one, and number of shares and the market price of the shares. So we are going to calculate its impact on two things, and the number of shares, market price, and total stockholder equity. So its impact on total stockholder equity will also be discussed in this exercise. So number one, A part is number of shares. So how many total shares are issued? Total 100,000 shares are issued. Now it is splitting into 2 for 1. So here you can say the number of shares would be, when we solve it, it would be 200,000 number of shares. So stock split, impact of stock split on common shares. So the common shares will be doubled. In part B, they have asked the impact on market price of the shares. So market value is $50. So because they are splitting into 2 for 1, so in market price is a dollar. 50. So we are multiplying it by 1 divided by 2. So the impact on market price would be 25. So you can write it in this way that the market price would be $25 per share after stock split. And the third one, C part, its impact on total stockholder equity. Total holders equity. As I have mentioned earlier that there will not be any impact on total stockholder equity. So here you can say before split and after split. You can say, you can check it or you can compare it before and after. So before we have $100,000 shares, and one share was for market value. On the basis of market value, you can say, or on the basis of par value. So we are going to compare it on the basis of par value. So par value was 10, so it was $10. Uh, so $1 million was the value before split. Whereas you can check it, the number of shares was doubled, which was $200,000 after split. Here you can see. Whereas par value will also be divided by 2 because the shares have splitted. So the par value was simply 5. So you can see before and after split, the total value is same. So before and after, total value is same in this case, in this problem. Next exercise which we are going to cover in this lecture is, let me check, exercise 11.10. So exercise 11.10 is this, 11.10, this one. So the common stock of the corporation was trading at $45 per share on October 15, 2010. A year later, means after 1 year, the company on October 15, 2011, just after 1 year, it was trading at $80 per share in the markets. So $80 is the share price. On this date, the company's board of directors decided to split the common stock of the company. So the first requirement is if the director decide on a 2 for 1. 2 for 1 means if you have one share, then the one share will be converted into two shares. What price would you expect the stock to trade immediately after the split goes into effect? So at that time, if the company decide the market price was, you can say, $80, so the price will also be divided, 2 for 1. So in the case of part A, the price is $80, and we will multiply it by 1 and divide by 2. So the price would be, you can say, $40 after 2 for 1 split. If the company decide on 4 for 1 split, then again the same requirement. So in B, if we have four for 1 means in this way we are going to divide 80 by 4. So we're going to divide 80 $80 by 4. So $20 would be the market price. Why do you think the company's board of directors decide to split the company's stock? As I have already discussed that there may be several reasons behind it. The first and the very important reason is to make the stock more affordable for the investors by decreasing the price per share. So the main reason the company or the board of directors decided to split the company's stock in order to attract more shareholders in lesser value, or you can say, initially it was trading for $80. So, it has decreased by $40 and then by $20. So, this is the main purpose. This could be the main purpose. So, this was from this exercise. That's it. So next exercise is 11.14. So we are going to cover next exercise, which is 11.14. This one. So this is the last example of um, treasury stock. But in this problem, we will discuss treasury stock as well as stock split. So this is very important from examination point of view because we have both type of stock, the treasury stock as well as the stock split in this problem. So Twins Tower Corporation authorized to issue total 200,000 shares. So this 200,000 shares is the authorized shares, whereas the companies originally issued 100,000 shares at the rate of $10 par value at $18. So at $18 is the market value at that time when the company issued 100,000 shares. Subsequently, or you can say later on, 25,000 shares were repurchased at $20, out of which 10,000 was resold at 23. So, in this situation, the story is the company issued originally 100,000 shares, out of which company repurchased 25,000, and then from that 25,000, the company reissued 10,000 shares. So right now in treasury stock, the company has 15,000 shares, the remaining 15,000 shares. So the company's balance, retained earning balance is 100,000, $120,000. So first requirement is to prepare stockholders' equity portion of the company, including all appropriate disclosures. So, okay, so in requirement number A, we have issued capital or common stock, and total number of shares were issued 100,000 shares, and one share was the par value was here 10. So dollar 10 at the rate dollar 10. So we are going to calculate amount. You can see 100,000 multiplied by par value, which is $10. So here we are going to calculate all the amounts in dollars. Whereas the $10 share was sold in $18, so $8 would be the additional paid in capital, or you can say additional paid in capital or the premium. So we have additional paid in capital, which is 100,000 shares, and the additional capital is 18 minus 10, so that is $8. So number of shares multiplied by 8 is the premium. So the next is the treasury stock, which company resold 10,000 shares resold. The company originally purchased it for 20 dollars and resold at 23. So the difference between 20 and 23 is $3, which is again additional paid in capital. Additional paid in capital, but this is on treasury stock. So how we are going to calculate it? We have how many number of shares? The company repurchased 25, out of which the company subsequently resold 10,000. So this additional premium is on 10,000, which is at the rate dollar. How much? $3. So $3 is the additional amount. So 10,000 multiply by 3. So the subtotal is, or the total capital is summation. This is your total paid in capital. Total paid in capital, or you can say total contributed capital is 1.83 million. And then we have retained earnings. Retained earnings is also mentioned in the problem, which is $120,000. So we have $120,000 here. So after adding these two, the total stockholder equity is, this is before treasury stock adjustment. So here it is, subtotal. Now we are going to deduct treasury stock. Treasury stock, which is unsold stock, which is buyback stock. So company total repurchased 25, but from this 25, the company issued 10,000. So remaining repurchased share, which is still repurchased and has not been reissued, are 25,000. So 20 from 25, we will deduct 10,000. So 15,000 shares, and the value of one share is $20. Par value is $20. So we are going to multiply it $20. So here you can say how many shares? 15,000 multiplied by 20. So we will deduct it from the total amount. So 1.65 million. This amount is after treasury stock. So final amount, or you can say in simple word, this is your total stockholders equity after all sort of adjustment. Briefly explain how the declaration and distribution of a 2-for-1 stock split subsequent to the above transaction would affect the stockholder equity section you have prepared. So in this section, uh, first of all, the total amount would not be changed because the number of shares will be multiplied by 2, and the value or dollar amount will be divided by 2. So after a 2:1 stock split is distributed, the par value of the common stock will be reduced to half, and all the shares will be doubled. So you can say 2 is to 1 split has no effect on the total figure of the common stock. Any additional paid in capital, retained earnings, treasury stock, or even the total stockholder equity. So in part B, the answer is the total stockholder equity will not be changed. Why? Because on one side, the number of the shares will be doubled, but on the other side, the value of per share will be half. So ultimately, the total amount will remain unchanged. So that's it from this exercise and from the lecture. Now, in the next lecture, we are going to start uh, comprehensive problems 11.1 onwards. So that's it from this lecture. Take care, class.